The problem of government debt is significant for modern economies. At the mention of the phrase government debt, many of us immediately think of countries such as the United States of America and Japan. In this video, we will analyze the problem of Japan's government debt, its scope, and how to solve it. How much is the debt? Japan's debt is approximately $10 trillion. This number, which depends on the exchange rate of the yen, forms different values of the size of the public debt in dollar terms. The fluctuations of the yen are shown in the figure. For example, a 10% appreciation of the yen against dollar reduces the national debt by about $1 trillion. As we can see, the yen experienced both rapid growth and significant drops. The structure of the debt is presented in the table. This table is based on the data of Ministry of Finance of Japan. One unit here is 100 million yen. So, according to the table, the most significant share of debt is government bonds. Their number is 10,581,000 units. Then we can see fiscal investment and loan program bonds, which make up 1,093,000 units. And also we can see borrowings, which make up 489,000 units. What are the reasons for the formation of such a large debt in Japan? The first reason is the crisis that occurred after the collapse of the Japanese real estate bubble in 1992. Thanks to loose monetary policy, prices for such an asset as real estate began to skyrocket. This figure shows change in real estate prices in Japan. The price in 2010 is 100%. We can see that the highest price on real estate was in 1992. Then the real estate bubble crashed. Also obvious that real estate prices will become in about 9 times higher from 1965 to 1992. And then they started to decrease. The reason is the system that worked like this. Citizens went to a bank, took out a mortgage and bought, for example, a house. Then they again took out a mortgage against the house they had already taken out a mortgage and bought, for example, a lot of apartments. Then they again took out a mortgage on the security of these apartments. And then there are two ways. Either these citizens buy a huge tower, or a severe crisis begins. The reason for the functioning of this system was that real estate prices were constantly rising. This means that the amount of collateral for a loan for banks grew, so they didn't see the danger in losing their funds. Thus, due to huge speculation, a phenomenon called the balance sheet recession arose. Schematically, it can be represented as follows. Prior to the collapse of the credit bubble, the main assets of enterprises, machines, patents, technologies, and speculative assets, in this case real estate, in total were equal to liabilities to banks. But as a result of the collapse of the bubble, speculative assets began to decrease due to falling property prices. The result was a situation where assets became several times smaller, but loans didn't disappear anywhere. Subsequently, enterprises went bankrupt, unemployment increased, and the state was forced to financially help everyone. By issuing bonds and increasing its own debt, Japan was able to avoid an even worse scenario for its economy. The second reason for such a large debt is the slow growth of the economy. This reason is a consequence of the recession of balance sheets. Due to the recession in the balance sheets, the economy slowed down its growth. The demand for goods and services decreased. Manufacturers began to reduce production, laying off employees, and lower prices in order to somehow attract buyers. Also, enterprises stopped investing in expansion of business due to the large debt burden, which they were able to bring to an optimal level only by the beginning of the 2000s. Even now, businesses are avoiding loans as managers remember the aftermath of the collapse of the 1992 bubble, as evidenced by a 38% decline in Japanese bank net income from 2009 to 2018. As for consumer incomes, they are also declining. Among Japanese households, there is a trend towards a decrease in the share of net savings in net disposable income. The statement about the impact of the deflationary spiral on the level of wages is also confirmed by the statistics of the labor exchange DODA. This is due to the fact that enterprises began to reduce staff salaries. Reductions were made, some employees were transferred to part-time work. For the same reasons, the volume of loans taken by low-income households increased, which also negatively affected the net savings of households. The third reason for a significant level of debt is deflation. Deflation is the process of increasing the value of money. In other words, why buy a middle-class car now if you can buy an elite car for the same money later? Despite all the efforts of the Japanese government to target inflation at 2%, this figure was exceeded only in 2014, which was more due to heightened inflation expectations. The reason for the fact that during the implementation of quantitative easing, finance didn't enter the real sector of the economy but settled in the banking system was the lack of the necessary demand for loans. The monetary base showed significant growth, while the money multiplier M2 didn't show such dynamics. Briefly about these terms. The monetary base comprises the stock of central bank money held by commercial banks and non-banks. In other words, the central bank buys bonds and shares from commercial banks, banks receive money to lend to the citizens. M2 is a measure of the money supply that includes cash, checking deposits, and easily convertible NIA money. It can be seen from the graph that with the growth of the monetary base even by 40%, the amount of money in the real economy almost didn't increase, since the population and companies don't take loans. The reason is the system that works as follows. We have a central bank and commercial banks. Commercial banks own securities, such as stocks and bonds. The central bank buys back securities from commercial banks, so they get money to lend to the public. This procedure is called quantitative easing or QE. Commercial banks then issue a loan to a person. Let's call him Brian. He goes to the store and buys goods there. Stores in turn purchase other goods or materials. As demand increases due to credit, prices also rise, thereby causing inflation. In Japan, the system works as follows. The QE procedure takes place, but citizens and companies don't take loans, thereby destroying the method of creating inflation. Also, we can see that significant changes in the M2 indicator occurred in 2020 and beyond as the government issued money directly to the citizens. Why do the Japanese take so few loans? Companies don't take loans because there are memories about crisis and large companies have huge amounts of free cash. Citizens don't take loans due to high initial contributions and high requirements of banks, since high initial contributions are needed for the stability of the financial system at a low rate. The fourth reason for the increase in public debt is the excess of budget expenditures or tax revenues. Although tax collection can be explained by many years of stagnation in the economy, the costs are also rising. For example, an increase in the proportion of people of retirement age leads to an increase in government spending, which it tries to make up for by raising taxes that fall on the shoulders of the working population. The structure of holders of public debt in Japan, the real amount of public debt. Based on the figure, it can be stated that 85% of the public debt belongs to Japanese citizens or private financial institutions and residents of Japan, including 44.1% of the public debt belongs to the Bank of Japan, which means that in fact government of Japan has a debt to the central bank with which it implements a joint economic policy. This situation is analogous to your right pocket owing money to your left pocket. This means that, if necessary, this part of the public debt can be written off by the Bank of Japan by agreement of the parties. So the amount of the actual debt is 55.9% of the level of Japan's public debt, or 672,691 billion yen, or $5,949 billion. If the United States dollar to Japanese yen exchange rate is 115. Despite of the fact that the level of real Japanese government debt is much lower than previously thought, it is still a significant structural problem for the Japanese economy, because the start of the economy leading to inflation will lead to losses for bondholders. A high level of public debt deters long-term foreign investors, especially investors with direct investment. Servicing the public debt puts a lot of pressure on the budget. The third point is especially important because it not only limits the potential for future development of the economy, but also requires significant annual costs. Based on Japan's 2021 budget data, you can see that government spends 22.3% of all its spending on debt service, which is almost a quarter of all budget spending. How the Japanese government solves this problem? Among the most common methods for reducing the level of public debt, the following can be identified: increasing taxes, increasing inflation to eliminate the deflationary spiral to start economic growth, debt monetization by the Bank of Japan. The Japanese government uses all three methods at once, but not all of them give a significant result. Let us analyze the consequences of these methods in more detail. An increase in taxes in the conditions of the Japanese economy leads to a stagnation in the consumption of the population. A prime example is the increase in the consumption tax from 8 to 10%, which led to such stagnation. The population is similarly afraid of a possible severe recession in the economy and is trying to increase the level of savings. Thus, in this modern form, this tax policy cannot be applied. Inflation targeting has been one of the key directions in Japanese economic policy in recent years. The goal was to achieve and maintain the inflation rate at 2%. It was believed that these measures would lead to an increase in the consumption and start the economy, since the population would not have an incentive to postpone their purchases, waiting for prices to fall due to deflation. These measures are practically useless, since the money didn't go to the real sector. Monetization of public debt by the Bank of Japan is carried out through the QE procedure. This is how the Bank of Japan became the owner of over 40% of Japan's government bonds. Thus, this policy gives a significant positive result. As you know, during the years of active use of QE, the Bank of Japan annually purchases bonds in the market for an amount approximately equal to $700 to $800 billion. Let's consider the impact of QE on the depreciation of the Japanese yen and inflation. In the period from 2012 to 2016, there is an active purchase of bonds by the Bank of Japan. The Bank of Japan creates an additional currency for these transactions, which weakens the yen. In the period from 2016 to 2019, there is a decrease in bond repurchases, which leads to the strengthening of the yen. In 2020, there is stabilization, but in 2021, on the contrary, the Bank of Japan sold bonds in the amount of 6 trillion yen, and the yen continued to strengthen. As for inflation, its growth from 2012 to 2014 is associated not with QE, but with rising inflation expectations. If we look at 2015 and 2016, we will notice that with an increase in bond repurchases, inflation on the contrary decreased. And in 2020, with the repurchase of bonds in the amount of 54.2 trillion yen, deflation occurred altogether. Recommendations for the problem solution. Do not increase taxes on personal income, since this leads to a stagnation in aggregate demand. Arrange QE for debt buyback. Personally, I think that the Bank of Japan made a mistake in the QE question by reducing the size of government bond redemptions from 2017 to 2021. Why do I think so? Inflation was very low, or there was deflation. From the point of view of logic, the subsequent stages of QE would be much easier to carry out than the previous one. Let's consider this statement with an example. Imagine that there are 100 billion monetary units in the country's financial system. The exchange rate is 100 units for $1. You need another $50 billion. Money has been created. There are $150 billion in the financial system. The dollar has become stronger by 50% against your currency, since there is 50% more money in the financial system and the exchange rate has become 150 units per dollar. Now imagine that you need another $50 billion. Money has been created. There are $200 billion in the financial system. The dollar should strengthen against your currency no longer by 50% as before, but by 33.3%, since there is 33.3% more money, since we no longer take 100 billion but 150 billion as a reference base. Thus, it can be seen that the next bond buybacks should have a less strong impact on the yen than it was before. Does this mean that now, in 2022, the Bank of Japan should conduct large-scale QE and weaken its currency? Right now, this procedure is hindered by the growing inflation in the world, which is associated with such factors as high prices for raw materials and energy, oil, gas, electricity, high prices for materials, metals, wood, etc., breaks in supply chains, high freight prices. In addition, we have found that with an increase in the purchase of bonds by the Bank of Japan, the yen weakens. The weakening of the yen from these levels may lead to inflation, as raw materials and imported goods will rise in price. Therefore, right now, the Bank of Japan needs to monitor the inflation situation and build its policy from it. In the future, when the world economy enters a recession phase, aggregate demand will decrease, which will lead to lower inflation and possibly even deflation. It will be possible to safely carry out the QE procedure and buy back the debt or part of it. In addition, the weakening of the yen will be hindered by such factors as deflation, which increases the demand for money, thereby strengthening the currency. Japan has a trade surplus. The yen is one of the reserve currencies. Other countries also carry out significant money emission. So, how much debt will the Bank of Japan need to redeem? 44.1% of bonds is already owned by the Bank of Japan. 10% of bonds is required by commercial banks and insurance companies as reserves for their activities, loans, insurance, etc. Thus, it is necessary to purchase 45.9% of the debt, or $4,884 billion. If United States dollar to Japanese yen exchange rate is 115. An additional positive factor in considering the problem of public debt is the high amount of savings by households and companies. The total savings of Japanese households are 1,946 trillion yen, or $16,921 billion. Moreover, cash and deposits amount is $9,188 billion. What about companies? Based on the calculations, the net savings of the corporate sector as of 2018 were approximately $3,522 billion. Another method of solving the problem of public debt, in my opinion, is a proposal for its partial redemption by the population and companies of Japan. One of the reasons for such a high level of savings is that the Japanese are saving money in case of another crisis. If there was a mechanism that would allow debt redemption, for the average Japanese, this would help solve problems such as partial payment today can save from worse consequences in the future. With the debt repaid, the country will be able to embark on a path of faster development, which will lead to the creation of new enterprises, higher wages, and put an end to the lost decades that the Japanese people are really tired of. Why do I think this might work? The reason is in the features of the mentality of the Japanese people, which is distinguished by its strong unity and mutual understanding towards each other. In general, the Japanese are willing to help when you ask them for help, for example, asking for directions. Here are other examples. Corporate ethics, where everyone works towards a common goal, the concept of we prevails over the concept of I. The second example is a real-life story. In Japan, there are 2 hotels or hotel chains with hot springs in a certain area. After one company experienced difficulties due to certain incidents, its competitor company advertised it to support their business. So, if we sum up the situation with Japan's public debt, it looks like this. The debt to be repaid is $4,884 billion. The Bank of Japan can create $700 billion per year. The total savings of Japanese households are $16,921 billion. Cash and deposits amount is $9,188 billion. The net savings of companies are $3,522 billion. Thus, it can be noted that the problem of Japan's public debt is not as terrible as many used to think it was. Thank you for watching. If you like this video, please like, subscribe, comment, share this video with your friends. It was EconoMillion. Have a nice day.